Hey guys, this is Muhab and welcome back to another video. Today we'll talk about the latest news regarding Douyu and Huya's merger. According to Reuters, Douyu and Huya's merger has been blocked. In this video, we'll talk more about what exactly happened, how that changes the fundamentals of my Douyu investment, and what will I do with my Douyu position. As always, before we start, grab your cup of coffee, smash the like button, and let's roll the intro. According to a post written by the Reuters, China's antitrust regulators, aka the SAMR, is set to formally block the merger between Huya and Douyu. This is because Tencent, which owns around a third of Douyu and a third of Huya, failed to come up with sufficient remedies to meet the SAMR requirements on giving up exclusive rights. Those exclusive rights range from music rights to Tencent's games. Think League of Legends exclusive rights that Tencent sells to streaming sites, which makes Tencent millions of dollars. The Chinese regulators want Tencent to give up on these rights so that there is more competition in the market and to pass the merger. On the other hand, Tencent does not want to give up many of its exclusive deals so that it doesn't lose one of its main sources of income, which is selling exclusive deals to streamers for its games. Now it's important to note that this news is not set on stone. It is still not official. The news was based on 3 people familiar with the matter that told Reuters about it. In addition, those people declined to be named, so we can't truly confirm if it's true or just a rumor. Maybe those 3 people wanted to share these rumors so the stock can sharply drop in price and then they can buy it at a much lower price and make so much money after the merger actually happens. I don't know. I'm not going to dig much into it as it's going to be based on pure speculation. However, for the sake of this video, I will judge my Douyu investment as if this news is 100% true and the merger won't go through. That rhymed. First, it's important to reflect on my original bullish thesis to understand what changed. As you can see from the eToro post I wrote 4 months ago when I bought Douyu for the first time, I talked about how the gaming industry, specifically streaming, is vastly growing in China and how it's dominated by young people with disposable income. Then I talked about specifically Douyu's valuation and how it was very attractive back then. Bear in mind that the company's market cap is now less than half it was at the time I wrote the post, so it's even more attractive now, but we'll get to that. Anyways, so after that, then I mentioned that the merger is the cherry on top that will benefit Douyu and Huya. Also, even back then, I knew that there was a risk that the merger was not going to happen. It's important to mention that I'll never invest in a company just for one single incident that may or may not happen. For example, I won't invest in a company just because I believe a short squeeze will happen or because a company is going to merge or split off. Unless that I am 110% sure that this split off, merger or short squeeze is going to happen, which never happened with me before. Now let's start with Douyu's remedies due to the failure to complete the merger with Huya, then we'll talk about Douyu's current fundamentals. According to the Form F4 submitted to the SEC by Huya and Douyu, it was written that, quote, failure to complete the proposed merger and reassignment in a timely manner or at all could disrupt Huya and Douyu's business plans and operations and have a material adverse effect on the trading price of each company's ADSs, end quote. That makes sense. I'm sure both Huya and Douyu's management had future plans based on the merger of both companies. They probably had an alternative plan which in case the merger didn't work out, but I'm sure they were basing a lot of their future plans on the merger. Competition war between both companies on the exclusivity of content and streamers will continue, which will result in lower profit margins for both companies. That will limit the long-term growth for both companies given that they will burn more cash to entice streamers to join their platform. The second setback will be if Tencent decided to prioritize one platform over the other. If Tencent decided to only focus on maximizing Huya's growth by providing them with the continuous support and exclusive contracts, then Douyu's growth will be hit quite badly. I don't think that will happen just because the Chinese regulators will not like that, and Tencent does not want that too because they don't want the Chinese regulators to be not happy about them. However, it is still a risk. In other words, the failure of merger will affect Douyu negatively due to slower future growth and lower profit margin compared to the merged company. Given all of that, let's have a look at Douyu's current valuation. First, we're going to start with the price to sales ratio of Douyu. I'm going to compare that with Huya. Then I'm going to look at the gross margins of both companies, look at the future forecast of their growth, and look at what their growth were in the last year, in the year 2020. And finally, I'm going to give you my opinion about both companies, specifically Douyu, and we'll compare it to other companies outside Douyu and Huya too. Alright, let's start with the price to sales ratio. As you can see here, Douyu has a price to sales ratio of 1.23, which means you almost pay $1 for every $1 of revenue the company makes. That's quite cheap for a company that grows at a double-digit rate. If we compare that to Huya, you will see that it has a 2.24 price to sales ratio, which is double Douyu's, but it's still quite on the low end when you compare it to other companies like, for example, Facebook, Amazon, or pretty much any other company that is at this stage. In fact, if you compare it to, for example, Fiverr, Tencent, which has, to be honest, it's not the right comparison since they have higher gross margin, but if we only look at through the price to sales ratio, you'll see that they have much lower price to sales ratio compared to Fiverr and Upwork. Now, when we look at the gross margin, you'll find that Douyu has a gross margin of 14.27%, and we see a negative trend here. Now, according to Douyu, this was as a result of broadcasting costs and sort of exclusive deals and, enticing streamers to join the platform. But still, you can see that negative trend from almost 20% of gross margin to 15%, in fact, almost 14%. If we compare that to Huya, you'll see they have more of a stable gross margin, and it's actually increasing. It got stagnant over the last couple of quarters, but it was increasing from almost 15% in 2018 to almost 21%. So you can see sort of Huya has a better gross margin. You can think of it as more of the stable businesses between Douyu and Huya. In fact, it's also larger than Douyu. But maybe the growth actually compensates that margin. Let's have a look at the future growth of both companies and sort of get more information from there. If we look at Douyu, you'll see that in the year 2021, it's expected to grow only 2%, just because of the huge growth it has in 2020 because of COVID. But the year after, in the year 2022, it's expected to grow again double digits of almost 17%, which is really good. When we compare that to Huya, you'll see that Huya has a lower growth in 2022, but a much higher growth in 2021. So that immediately made me think if Huya actually grew much in 2020, in 2020 year, which is the COVID year. Because if it didn't, then it makes sense that it's going to grow more in 2021. So I had a look at the year 2020, and that's for Douyu, and you can see that it grew by a huge margin. Talking about 45% in January, 30%, 42%, 48%. Huge numbers. Not that much in the year 2021, but huge numbers in the year 2020. However, when I looked at Huya, you can see that they've also grew at a large percentages. 53% here, you got 40% here, 30, and another 30% here in the Q2 and Q3 of the year 2020. So they've actually grew quite relatively the same in the year 2020, yet Huya is expected to grow more in the year 2021 compared to Douyu. So what I'm trying to say here is the higher price for Huya is actually sort of expected, just because it has better gross margin and it has better growth aspects. Now, if you go back to the merger, this actually shows that Douyu actually needed the merger more than Huya, because it is sort of the second largest company. It's weaker than Huya in terms of the fundamentals. However, no doubt that Douyu is cheaper than Huya, which is a good thing for us. Now, the reason why I don't have Huya in my portfolio is because Huya is still not on eToro. So I didn't have I couldn't add that stock in the my portfolio. So I've just added Douyu. Now, all in all, I think both companies are going to do really well over the long term. Douyu is cheaply priced, Huya is more premiumly priced, but I would say both of them are cheaply priced compared to, for example, Bilibili, which I think has a price to sales ratio of like 15. And by the way, Bilibili is like the Chinese version of YouTube. So both companies are priced really well, and I expect them to grow at a quite large percentage over the next 5 to 10 years. Despite Douyu arguably needed the merger more than Huya, I have no plans to sell my Douyu stocks. Douyu fits perfectly in my portfolio as it is my exposure to the gaming industry. Long term, the whole industry is going to grow to great levels. Think gaming tournaments, popular streamers, and much more. The challenge is to monetize the users that join the streaming platforms. It's a tough challenge, but I believe both Douyu and Huya will overcome it in the future. For more information about the industry itself, check my Douyu review on eToro, which I'll leave in the description below, where I talked more about the growth of the industry itself in China. On the other hand, I'm not planning to buy any more of Douyu anytime soon for risk management reasons. It is because the stock heavily fluctuates and because I don't want more exposure to the streaming industry of more than maximum 5% of my portfolio. The only time I will consider selling Douyu is when eToro adds Huya to the platform. That is when I may decide to sell part of my Douyu shares and buy Huya to further diversify my exposure to the gaming industry in China. I hope this video gave you a clear picture of what happened, how did that affect the company's fundamentals, and what are my plans for Douyu and Huya in the future. If you have any questions, drop them in the comments section below and I'll get back to you. As always, before leaving, please don't forget to like, share and subscribe. This is Muhab and I am signing out.